Hello and welcome. My name is Jeffrey Kennedy and welcome back to another episode of Elliott Wave Junctures. Today we're going to look at one of my favorite old school chart patterns, and that's the head and shoulders. And it's actually a very simple pattern to work with. And as you can see here, what we actually have with respect to its formation is it consists of a left shoulder, a head, and a right shoulder. Now the movement or the extremes that form between the left shoulder and the head and the right shoulder, these pivots right here, what we do then is actually connect a trend line between the two, and that's referred to as the neckline. Now a lot of times what you can do is whenever that neckline or that first pullback unfolds following the head, we can draw that trend line and then take a parallel of that line and extend that from the left shoulder. And very often what that will do is provide resistance for the right shoulder, as you can see here. Sometimes the movement up will be muted or only will travel, say, half that distance. But again, I do like to utilize these trend lines that the actual neckline actually forms. Now following the breakout, and this would be the breakout, this is when the neckline is actually penetrated, what we can then do is employ what they refer to as a neckline measuring objective or neckline measuring technique. And that would simply be from the height of the head down to the neckline, you take that distance and then just simply project that downward from the breakout point. This just gives you a very, very nice target to achieve to the downside, or to look for prices to travel to the downside. Now again, in this instance here, because we have the left shoulder, head, right shoulder, this is a bearish reversal pattern. The same thing can happen on the bottom. This can actually be a bullish reversal pattern as well. Now, even though, it is again one of my favorite old school chart patterns, but how does it relate to the wave principle? Very simple. Let me show you. Okay, here we have a price chart. Now over here, let's just go ahead and identify this, say, point 3, or where I've identified as wave 3. Let's call this the left shoulder, the head, and the right shoulder. And in fact, let me just go ahead and type those in to make it a little bit more clear. Here's the left shoulder, and here would be the head, and then over here would be the right shoulder. Okay? So this is the old school pattern, left shoulder, head, right shoulder. Now from an Elliott wave perspective, think of the left shoulder, or the extreme of the left shoulder, being the extreme of wave 3. Then you have your 3-wave pullback in wave 4. And then you rally to a new price high. That represents wave 5, or the head. And then following that formation of the head, or that 5th wave up, then you see an initial move to the downside that represents wave A, or 1. And then a move back up, 3-wave counter trend move, that's going to be your wave B, or 2. In this instance, that's going to equate to the right shoulder. And then when prices break out the neckline, we can either travel down or see further decline in wave C, or we'll see a much larger sell-off in wave 3. But this is how you would actually equate, say, that old school head and shoulders pattern with, say, put it into an Elliott wave context. Waves 3, 4, 5, A or 1, B or 2, or C or 3. Now, part of the reason why I'm actually doing the review today is, number one, I really do like the head and shoulders pattern. It's one of my favorite patterns, and again, it fits in very, very nicely with the wave principle. In fact, Robert Prechter wrote in one of his newsletters how the wave principle actually subsumes a lot of the old school technical work. But also, too, if you recall, I've been following a head and shoulders, or a potential head and shoulders pattern in the euro. Here we have our left shoulder, here's our head, and here's our right shoulder. Notice we have yet to penetrate the neckline, so that means we just simply continue to watch and wait in this market. But I also, when I was looking at currencies, and we have an excellent product here at Elliott Wave International, edited by Jim Martens, which is the specialty services currency product. When I was taking a look at the currency products, or excuse me, the currency markets, I saw another pattern very reminiscent of the head and shoulders, and this is on the weekly level in the New Zealand dollar. Here would be a left shoulder, there's our head, here's our right shoulder, and again, notice the neckline. And in fact, let me just go ahead and draw that neckline again from scratch, and you'll see why I kind of got excited about this pattern in particular, this price chart. Here's the point here between the left shoulder and head where I would originate with the neckline. And then following the head, we see this initial pullback. I take a parallel of that line off the extreme of the left shoulder, and ideally that will provide resistance for the right shoulder, which it very much did. Now all I'm looking for at this point in the weeks ahead is for a decisive break of the neckline, and then at that point we can then employ the neckline measuring technique, which again is the distance between the head and the neckline projected downward from the breakdown point. That about does it for today. I hope everyone